Bob says, I believe 80% of the time since 1950, we get a Santa Claus rally, and also in a pre-election year with an incumbent president, double-digit rally in the markets. Agree, disagree? What's your take on what he said?
I agree. Santa's coming to town. Don't fight the tape. You've got such strong technicals right now that are driving this market up. You've also seen one of the best signals we can see, which is breadth had expanded. Leading out of this bottom in November and December have been small caps. They've been horrible all year, and finally they're finding some life. They're up about 20% since the end of October, and it's just great signals in the market. So I think you could see all-time highs if we do get Santa coming to town in the market next week. You could see us close at about 4,800.
Yeah, just on visual cues, I should have known that you thought there was a Santa Claus rally coming. I also do want to ask you about Nike today. So Nike, pretty much all the declines on the Dow futures right now, cost cutting, lowering guidance. How do you see just that report impacting the markets today?
I think it could drag down some consumer discretionary and some of the retail places. And it's been a really mixed earnings season. I think that's the hardest thing for investors to grasp is how healthy is the consumer. Nike to me is fascinating. Yes, they missed a little bit. They disappointed, but they have this $2 billion cost cutting, which should help them over the coming years. And historically this year, companies that announce cost cutting have been rewarded in the market. So it's very interesting to see Nike be punished. I think there was a lot of concerns. China came in weaker than they wanted. Europe, Middle East, and Africa came in much weaker. Those two sections, as well as the U.S. lagging, really cause investors to step back and say, okay, you're going to have to get through inventory. You're going to have to maybe do some discounting to get through inventory, and concerns near term that you see continued reductions in sales forecasts. Right. So I think Nike and a lot of these retail and sportings could take a little bit of a hit today. All
right, so you already kind of gave us your sense of how you see the day ahead, but just to kind of put a button on it, what's your work word of the day? I have a feeling it's Christmas related.
No, never. It's obviously Christmassy. It's Blitzen. Number one is my favorite reindeer name. And then number two, it comes from the Dutch word for blitz, which means lightning fast attack or raid. And right now we are in an absolutely blitz raid in this market, a rally. And so I think it's Blitzen leading the way, and we'll see him continue to come through the year. But fun fact, all the reindeer are actually probably female because male reindeers tend to shed their antlers in the fall. So Blitzen and Rudolph might actually be chicks.
This is so much more reindeer information than I was even. You just hit me with so much right there. You threw me off for a minute. I also want to talk to you about something else. B of A out with its flow show data just now. This is data from the previous week. New record set, $1.3 trillion inflowing into cash. What does that say to you?
Investors are still a little scared, and cash is an alternative. You're still making your 5% plus, but that buildup of cash on the sidelines, again, is a bullish sign because there's so much dry powder that can continue to flow in the markets if investors start to get a little bit more FOMO. So while rates potentially shifting down next year could push more of this cash into the markets if they don't get these juicy yields, but obviously investors see a little bit of risk and maybe want to make their earnings, and I'm happy for anybody that is moving into something like a money market or something making them interest. Please don't be sitting in bank deposit at 0.01% at this point in the market cycle.
All right, so one more from B of A. The flow show, no, always a good one. $33 billion in outflows from Treasury inflation protected security. So in your mind, is that the market just basically saying we think the inflation story is going to continue to go downward?
I think it is, and I think PCE will probably confirm it this morning. Peak inflation is likely behind us. We're seeing all these trends. Honestly, if PCE comes in where it's anticipated today, your 6-month PCE is going to be right around that 2% target. And so I think with these easing inflation concerns, you are seeing peak inflation well behind us. All
right, last thing, your pick. One of them for us today is Welltower, ticker WELL. It's a REIT. We had another REIT on earlier, but it's kind of a combination of two kind of underloved sectors, real estate and healthcare. Why so bullish on this for next year?
Okay, don't hate on the REITs. The REITs are the best sectors when rates start coming down. So some of it's a play in the changing rate environment, but it's a healthcare sector and senior living. And you've seen the rise of the boomers and our aging population, and construction hasn't caught up. So I love the senior living part of the real estate sector.